Hello, James Woodburn here, publisher of Fat Tail Investment Research, and welcome to this special Zoomcast on what could be a huge opportunity emerging in the gold market. Now, joining me this afternoon is our gold investment expert, Brian Chu. Brian, welcome, mate. Thanks for clearing your diary to be with us.
My pleasure, Woody.
Now, many of you will already know Brian and his credentials, but for those that don't, let me quickly recap. Brian is one of Australia's foremost independent authorities on gold and gold stocks, with a unique strategy for valuing big producers and highly speculative explorers. Now, he established a fund, the Australian Gold Fund, his private family office fund, that only invests in ASX-listed gold mining companies. As far as I know, it's the only such fund in Australia, putting his strategy and research skills to the test under public scrutiny. And with a self-proclaimed 85% of his family's wealth in the gold market, he backs his own skills. And as of today, March the 1st, he's more than tripled his net worth over the last 8 years investing this way. Now, in my opinion, there is no one better to talk about the moves in gold than Brian. So what's going on with gold and what is driving these moves? Gold may have rallied strongly, but certain gold stocks have not yet. But why and when? And does this give you, our reader, an opportunity in 2022? Now, Brian thinks it does. And as an independent publisher of investment ideas, it's our job to get you ahead of the crowd. So let's get to it. Brian, let's start by putting the recent moves in gold into context.
Okay, so with gold, you have actually seen that in 2021, it was kind of like trading in a tight range between about $1,600 to $1,800. But since 2022 began, you could see that it's actually gone up quite a bit, especially after the initial dip that we saw at the end of January. Now, what is causing gold to move up from about $1,700 an ounce to over $1,900 an ounce, or in Australian dollar terms, we're talking about $2,500 to almost $2,700 an ounce. Now, we would expect that the key cause for the price of gold rising would be inflation, and also the global economy looking particularly weak because of the supply chain issues we faced in the lockdowns and the lockdowns arising from the pandemic in 2020 and last year. But what we actually saw was that it is the Ukraine conflict between the conflict between Ukraine and Russia that really caused gold to jump out of the gates. And it seems like gold right now is operating off of a, you could say, news on war and uncertainty, so geopolitical tensions. The economic side of things is still sitting in the backseat, but my opinion is that that is actually what you, as a reader, as someone who is able to discern what's going on in the market, you should focus on that, whereas the conflict between Russia and Ukraine, that's the cover story, and that I would believe most of the traders that are currently jumping onto gold are trading on noise. But when that noise subsides, the economic problems that we are seeing and the impending rate rise from the Federal Reserve in middle of March, that is going to come into the main view. So make sure you don't follow the shiny bouncing ball, but you follow the right ball, and that's the economic pressure on our economy. That is what's going to drive gold going forward.
So you're basically insinuating there that gold's been in a long-term, this is just another move in a long-term gold bull market that I think started around 2015, did it not?
Yeah, so you could say that gold actually began its bull run in 2015 after the first rate rise from Janet Yellen in December 2015. Then we had we actually had a very quick run in 2015, 2016. And in 2017, 2018, gold took a pause. In 2019, as the Federal Reserve decided to walk back on raising rates, gold actually hit all-time record highs in all currencies, except for the US dollar and those pegged to the US dollar. But look at Australian dollar gold. We went up over 2,000 Australian dollars an ounce for the first time in May 2019. And we haven't actually gone back to a one handle ever since. We did take a pause last year, and I believe that we're at it again because there is another rate rise cycle coming up.
So gold has basically awakened again and is fulfilling its traditional role as a safe haven asset, especially with the latest extreme global tensions that are going on. But as you say, gold's really been in a long-term cyclical uptrend for a long time now. So let's now turn our attention to gold stocks because, and excuse me for being too simplistic, but when a commodity goes up in price, to me, logic says that producers of that commodity should go up too. Now, is that happening in the gold market right now?
Well, Woody, I mean, the simplistic view that you say that if the commodity price goes up, then the mining companies go up. I actually came into investing in gold stocks thinking that, and having gotten burnt a bit along the way, I learned it the hard way. But it's one of those lessons which, like learning riding a bicycle, you'll never forget. There is much more to gold stocks going up than just the gold price itself. We're talking about companies that have to make complex decisions in running a mine or exploring their land and looking for the right minerals, and that it is and that the mineral deposit itself is economical to mine. Mm-hmm. So we learned along the way, like with my readers, that you have to look at gold companies based on three different stages: those who are exploring, those who are building a mine, and those who are producing. If that's what you're asking, perhaps I can give you a bit more detail and flesh it out.
Yeah, let's start with the producers then, because they're the ones that are leading the way at the moment. That's correct, right?
Yes, it is.
Explain why that's happening.
Now, this is an interesting thing that's going on, because normally you would believe that in a bull run for mining companies, it's the smaller companies that lead and then the larger companies follow, because the smart money gets a whiff of the action and they start with the speculative side first. This time round, it's more because we had a year and a half of stagnation in the gold stocks. So people are more cautious, and it's the producers that have had a run first and the speculative stocks haven't. Now, what's driving the producers going up is that the oil price only until recently was very conducive of producers generating a significant profit in their operations. So with profit margins, we're talking about $500 to $800 an ounce of gold, and that's about 30 to 40% of their total. So the total revenue, 40% of that's going to profit. That's an astounding result by any measure. So that's why the gold producers are going up. They're doing so earlier. Some of them are actually paring back a little bit because of the upcoming fear trade. But I can see that there is actually a lot of steam to come still, because of the economic pressures that are coming in with the rate rise. So gold is going to be a safe haven. And we saw that with the announcement of the invasion of Ukraine. You saw gold was literally the only asset that went up. Gold producers followed, simply because investors this time realized when it comes to war and when it comes to fear, the flight to safety is gold. And the gold producers with such good profit margins, people decided, yep, we're going to hop onto this to protect our portfolio.
And I think if you look back to other crises in history, for example, the Great Depression, one of the few companies on the stock market that actually led the way were gold producers back then too. Different crises for different reasons, but that's just an interesting point.
Yeah, and probably to add, if you look at 2008, gold producers also led the way in recovering along with gold went up first, then it was the gold producers, then the rest of the market followed. We also saw that in March 2020, gold and gold producers actually made their recovery and bounced up 1 week before the entire market followed.
And that's an interesting point. And that is why we've kind of called this discussion the Great Gold Lag. And there's a reason, because there's an opportunity coming here that which you were just telling me about in recent days. So you've got the gold price going up, and then you've got the gold producers following suit, and they're leading the way. Now, what about the gold explorers? Because this is essentially what we mean about the Great Gold Lag. Gold is in a long-term uptrend. The producers have followed suit, but the explorers, traditionally the biggest movers when they do get going, whether it's up or down, because you know they lead the market on the way up and they lead the market on the way down, but they're yet to join the party.
Yeah, that's it. That's what I actually was wondering what was going on this time, because personally, I actually moved quite a bit of my own personal the wealth in the Australian Gold Fund from the producers to the explorers, which is what the mining legends would actually do. And we probably felt that maybe we got off a little too early. And at the moment, I can see that the explorers and the mine builders are starting to get out of the gates, but it's almost like they're a bit, there's a bit of stage fright with them. Now, this stage fright doesn't mean that they're going to shrink back to the behind the curtains. My belief is that it's more a case that because we had the 18-month stagnation in gold and gold investments, the smart money are also a little bit cautious. But once they realize that this is actually the real deal, because the economy is going to start moving towards becoming more cautious once the Federal Reserve really raises interest rates, we will actually see these speculative gold stocks, they're going to jump. And if you want to see how big it could go, have a look at what happened with most of your explorers and your penny gold stocks from April 2020 to August 2020. Now, as I say this, I need to actually remind everyone, past may be prologue, but past does not necessarily mean that it has to repeat in the future. Mm-hmm. But I lean my money on the possibility that it will. I'm willing to take that risk. And I'm just wondering how many people are willing to join me on this ride.
So gold explorers are historically the way to speculate on the rising gold price. But how do you rate the opportunity in gold explorers staring at Australian investors today?
Now, with gold explorers, the important thing is it's about timing, because these companies are actually, in many cases, in very early stages of development. Then there are companies that have found a deposit, but these deposits may need the right conditions for them to be brought into production. And even if the conditions are right, these companies need a lot of funding in order to build the processing plants, to bring in the machinery, to set everything up in order to pour their first gold. Mm. So in this case, speculative gold stocks is actually a heartbreak territory for those who think that they can get rich, but they jump in without working out how deep the market is, and many jump in head first. The way I do it is I actually try to stay away from the completely speculative gold stocks where these companies are literally looking for minerals in the ground. I tend to weight my chances on those with a confirmed deposit. So they found something, it's being recognized by geologists, and there is now the process of them doing further exploration and drilling for them to determine whether it's economical to mine out of this deposit, and to find funding from banks, from large key investors and also retail investors like ourselves in order to get the project going. So I try to look for something that is more de-risked, as in the huge speculative risk is under control, but not gone. These would increase my chances of making big profits. It's almost kind of like going into a casino and having understood on a particular blackjack table how the cards are dealt, and you actually know the facial expressions of those people that you're bidding with. I'm not walking into a roulette table simply to throw in my lot at something completely random. I want to be in a place where I'm actually familiar with the people that are in there, so I can kind of read their expression or their language in the reports, of course, and determine how close and how likely this project is going to get off the ground.
Now, I'm going to ask you for a few key takeaways to allow our viewers to go away and when they're doing their own research in order to judge these tiny explorers that they might come across. But just to get us right up to date. So the gold market's moving. The producers have already followed suit. There's a lag. There's a gold lag with the explorers, which is traditionally the most exciting, the riskiest and speculative end of the market. And if you're a trader, this is where you probably want to be looking. Now, they're yet to move, according to your analysis, but they are the riskiest of all resource stocks. And you like to de-risk that pool of stocks by looking at the explorers that are not just a company standing at the edge of a dusty hole and going, oh, I wonder what's in there, but they have a few more things that they're doing that allows you to judge that they're a better bet than, say, the completely riskiest one. So you de-risk, but you don't get rid of the risk completely, but there's enough risk there for it to be a really compelling speculative trade. So I was going to ask for our readers at home, what are the top attributes you look for in the group of gold explorers that you do target? So you've taken away the super risky ones and you've got a pool of, I don't know, a number of stock gold explorers. What couple of attributes do you look for in the ones that you would put your money into than the ones that you wouldn't from that point to maximize the chances for gains while respecting the clear risks inherent in them? Does that make sense?
Yeah, so there are 4 criteria that I look for, and in the order of decreasing importance. So the most important first and the least less important, but not the least important. Grade, depth, type, and size. Grade, as in I'm looking for a deposit with high grade ore because they're more economical to mine. You crunch through less dirt to get the same amount of gold or silver. Number 2, it's the depth. I don't want to actually see a company that has to dig really deep before they start hitting the pay dirt, and therefore it's expensive to get them started to get off the ground. Third one is the type. And we're talking about ore is ore, except it's about what types of rocks are encasing that ore. Some rocks are harder to process than others. So so I actually have to put that into consideration. Now, the least important out of the 4 doesn't mean that it's not important, is the size. Now, most people would tend to have gone for size first because size matters. My view is I want quality ahead of quantity. You can have a huge deposit in the ground, but if it's relatively deep beneath the ground and it's not particularly great, the grades are not particularly great, it means that you got to have a pretty big processing plant. You need a big operation. And how likely is that going to get off the ground? Not as likely as one where everything is quite neat, close to the ground, high quality, and it doesn't have to be too big. You just sometimes start small and grow your way into becoming a bigger operator. That can sometimes be quite a logical way of running a business when you have such huge initial investments. So that's actually the way I look into explorer stocks, and it's so far done me quite well.
That's great. So let's finish on the big picture. There's a lag going on. We recognize that. The producers have moved already. The big opportunity is in the risky end of the market, which haven't moved yet. When is it likely to happen, or is that impossible to know?
Now, I believe that we are getting closer to it. And the key thing to remember is when the Federal Reserve acts to raise rates, the bite is actually more, I would say, the bite of the Federal Reserve is more dangerous than the bark to the rest of the market. But with gold and gold investments, it's the other way around. The bark is worse than its bite. And therefore, now that they stop talking about it and the Federal Reserve starts acting on it, this is when gold will actually be the place to go, because people are going to see that the markets are going to start turning around. People are going to have less hot money flowing around in these markets to push all the other risky assets up. And in that flight to safety, people will probably flock to gold. And I believe that gold investments, gold stocks of all shapes and sizes, could be the ones to rally. And that's why I'm in there and I'm getting ready.
And do you see sort of the current geopolitical tensions as, because a lot of people are going to be worried about it, absolutely, and it is quite shocking to watch on TV and all that thing. But you see past that, right? You don't see that as something to get shell shocked by. You told me earlier that you see these times as a real opportunity to look past it. A crisis always feels like it's going to last forever, doesn't it?
Yes. So, I mean, I don't want to talk down on the destruction and the hardship that people are facing, because war is real and suffering is real. But at the same time, I believe that this time around, there seems to be a controlled type of warfare. So therefore, my view is that is going to dissipate as quickly as people actually saw it happen. Now, I don't know how long it could last and whether there's something else somewhere else where there'll be conflict. But the undertones of the pressures that the entire global economy faces, I think that is actually the bigger picture to look at. And the conflicts that spark around the world will probably be coming out of economic troubles. So therefore, until the central banks can solve the problem, and I believe they won't, which means that somehow the financial system has to get rid of these institutions. Until they're gone, I do see that gold and gold investments are the place to be as a safe haven. And it is these types of crises where I believe you need to find a place of safety and opportunity.
Well, that's great, Brian. Thank you. Well, those listening at home, I hope you enjoyed this quick fire discussion and got something out of it. And if you're actually intrigued by the opportunity that Brian's highlighted today, and you would like to get some timely intel on the precise explorer stocks that he's recommending right now, then I'd urge you to check out his premium gold stock trading service, Gold Stock Pro.